Today we're gonna look at trailing stop loss. We're gonna see what it is, how it works. Uh, we're gonna launch several actual orders with trailing stop loss attached to them and see how it works as a stop loss, how it turns into trailing take profit at some point if the price goes your way long enough, and why and how it could be used with an actual take profit together. What are the pros and cons of those decisions? Okay, let's begin. So this video assumes that you already know what, at least in general, what trailing stop orders are and what they do. If you don't, please check out our special video in the same playlist that talks about trailing stop order basics. But in a very simple terms, trailing stop orders, they follow the market price at some distance if the price goes your way, and basically they don't move if the price goes against you. What it does, if you are right about the price trend, it allows you to ride with it, either choosing the better entry point or a better exit point, basically by maximizing your, either minimizing your entry price or maximizing your exit profit, right? So that's the trailing stop, trailing orders. And in good crypto, as you can attach a stop loss or take profit to any order, you can also attach a trailing order as a stop loss to another order, basically creating a trailing stop loss. So let's look how to do that and what it will do. For registration, we're going to use this test exchange. That's not a real exchange, right? That's something that we use for internal testing purposes, and it has several charts which follow some patterns, predefined patterns, so that easy to forecast where the price goes. And that's a very useful tool for us today to see, to test how the trailing stop loss works. Okay, so basically, when you're creating an order, say you're sending a market order of some size, right? You can attach a stop loss to it, which is kind of obvious. Let's say it's a stop loss of 10%, which is kind of self-explanatory, right? So that's the price you're gonna buy this instrument at, and if the price falls by 10%, it's gonna hit the stop loss level. So basically preventing you from losing more money than you already did. Okay, over here you can see this modifier says turn it into a trailing stop loss. Okay, and that's what it does. Basically, what you see now is that we have the same 10%, and basically stop loss stayed at the same level. However, as it is now a trailing stop loss, so in case you have just sent this order, and in case the price falls down by 10%, so that's gonna hit this level, the top stop loss is gonna trigger, and I'm gonna lose 10%. However, as you can see, we now know that the price probably will go up, right? That's what you can see it from the chart. So if the price will keep going up, actually this stop loss will move with it and will keep at a 10% distance from this price. So as the price rises, so does the stop loss. It's moving already. You can see the price moves, it moves a bit higher. So as you see, the order now tracks the market price here. Expected price of the entry order is the market price, and the market price goes higher. You see the stop loss basically moves with it. Same will happen once you send your order and it executes. So the stop loss will move with the price, and the price will rise. So let's, for example, change the order to limit order, so just so that the price stays at some predefined level. So let's say we bought here, right? So we bought here, stop loss was here when we bought here. However, as the price now have risen to this level, so your stop loss, the trailing stop loss by this time would have risen already somewhere here, just to keep at the same 10% distance from the market price. And as it goes higher, and it goes higher, higher and higher. And now you can see what's going to happen, right? So at some point, Okay, let's move it back to 10%. So at some point, when you've bought here, right, the price keeps going up and your stop loss trails the market price, it follows it, stays with the same 10% from the market price. So it goes higher, higher, higher. And some point when the price rises enough, it will first move to break even, meaning now the worst that could happen if at this point price will stop rising and start falling, it will hit the stop loss. You will actually not lose any money because your stop loss is already at your break-even level at the price of your position entry or your base order execution, right? However, if the price continues rising, what's going to happen? Your stop loss at some point will actually rise higher than your entry price or the price of your base order, or right? So the price you bought at, and actually that trailing stop loss will turn into trailing take profit, so to say. So it's not as even it will hit now. So now, say price has risen, your stop loss moved already here, and now if the price falls down and hits the stop loss, it will actually make you money, basically becoming a take profit instead of stop loss. So that's in essence how does the stop loss work. And obviously that's with buy orders. With sell orders, it does exactly the same, just with the in different direction, basically vice versa, right? So it's going to be those 10%. So if I now obviously sell and put a trailing stop loss here, it will, okay, maybe I'll sell at this market price. My trailing stop loss will start here, and as the price moves against me, it will not move, it will keep in place, and once it hit this level, I'm gonna lose those 10%. So in essence, what does trailing stop do, or what is it for? So if you're compared to normal stop loss, if you just send a normal stop loss, you know that the most you're gonna lose is 10% if your stop loss is hit. But however, even if the price had risen somewhat and then fell down, you'll still lose those 10%. Whereas the trailing stop loss, also if you were wrong and you bought here and the price went straight against you, you're still gonna lose the same 10%. However, if price has risen at least somewhat from your buy price, even if you were right at least by some degree, so this stop loss would have already moved higher and stayed here. And if then the price turns and goes back against you, you will lose less than those 10%. So basically, any move in your direction decreases your potential losses. So that's the beauty of the trailing stop loss. So let's actually send a trailing stop loss and see how it works in real life. So we're gonna send a market order, and we're gonna attach a stop loss which has a modificator. It's trailing stop loss at, say, just 1% below the market price. Okay, let's see. Yep, we are buying those cosinus. That's actually a cosinus. Okay, cosinus. We've bought this instrument, and now let's see what's going on here. You see that we've bought here, and this is the stop loss trigger, and it keeps going up as the price rises. This is the max price, right? So that's the maximum price, the maximum of the market price where it's been after the order started trailing. So for us, so basically what you can see, it just updates once per candle. Maybe we can, I don't know, we go to 15 seconds candles. Maybe it's gonna be better. Yeah, okay, 15 seconds candles, it's better. So basically, you see now that's my stop loss trigger. That's my buy price. That's where I bought. And you can see that my stop loss trigger was here initially, but as price had risen, it stayed within 1% of this market price. So it went higher, 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 and still higher, right? So here it goes, basically updates once every 15 seconds and once every candle, but on our servers is actually running, kind of live. So it's actually continuously going up. So as you see now, my stop loss already is way past my buying price. So it's already turned into a take profit. And if the price keeps rising, instead of stop loss, I continue to, making money. I'm continue to increasing my profit. So so to say, trail or ride the trend, right? And that's That's basically the beauty of trailing stop loss. Let's zoom out. We'll see how long. Yeah, it's gonna continue for a while. We probably won't wait until the price turns and goes back down and hit it, but that's the idea. So that's that's how your trailing stop loss follows or trails the market price, right? So basically, the market price instead stays within your chosen distance, which is in 1% here. And you see, it still says sell 1% decline. That's exactly what it's going to do, right? Whenever the price declines by 1% from its basically maximum point reached after the order was activated, it's gonna trigger. Okay, so that's pretty much it with trailing stop loss. Now let's just reverse this order maybe, right? And send the same order, but not instead of buying, we're gonna sell here, not touch the same stop loss. We're gonna increase the distance so it will stay active for some time. And you see now it's still trading stop loss, but as it is now, we're actually selling, and that the stop loss is now higher than the market price. Now, as the market price is gonna rise, so the price basically goes against me, right? So because I sold with my base order. So as I said, now the stop loss, trading stop loss trigger, it stays in place, right? And when it's gonna hit, I'm gonna lose that 3% that I put as my trailing stop loss distance. Okay, just to illustrate, right? So, yep, I'm gonna lose those 3% of UTST or UTST, whatever that is. Yep. Okay. That's my actually trading stop loss from the previous order. It's open, and you see it's open and it keeps getting higher. So as you see now, okay, in this example, my trailing stop loss was hit. It didn't improve because the price went straight against me after I executed the order. However, if I go back and go to my previous order, which is still open, you can see that it's, can maybe go to the base order so it's easier. Yeah, you can see it, it continues improving, right? It continues improving. So that's where I bought, so that's where I started trailing. It's already past here. That's the execution of my other trailing stop loss, which we just witnessed, and this is gonna continue for a while, basically, right? Until the price rises here, and when it falls, it's gonna execute somewhere here. So that's pretty much what every trading order is for, and trading stop loss as well. Okay, let's leave it at that. If we are still here by the time price goes back down, we'll check what's going on here. Okay, let's go back to the trade screen and let's look at another example. Another case is when and why would you want to use together trailing stop loss with a take profit. So yeah, there is quite a clear use case for that. Sorry, I gotta zoom out. So we're just gonna be easier to see. So let's say we have a stop loss at 5%, we have a take profit at 10%. Okay, so my setup now is this. So I have a trailing stop loss at 5%. So this is gonna be my buy. I'm buying, right? This is gonna be my buy price. My stop loss will start here, and if the price improves, it's gonna trail and continue with this, with the rising with the price, right? Whereas the take profit is at 10% here. And obviously it's not gonna move. Let me switch to limit price. Yeah, so this I'll buy here, take profit will stay here. However, as the price rises, right, so what's gonna happen? So again, yeah, I bought here, the price rises. My take profit is not a trailing take profit, it just stays in place. At 10% from the initial buy price, my stop loss will keep at 5% distance from the price as it keeps rising. So it will go higher, and as it keeps rising, it will get ever higher. And again, at some point, it's gonna go higher than break even, and so on and so forth. However, as it stays at 5%, under my buy price. Obviously, at some point, so it stays below the price. At some point, the price is going to rise and hit my take profit. So obviously, take profit will execute, and the trailing stop loss will just be cancelled as it's an untouched order. Basically, the app knows that once the take profit is hit, you no longer need the stop loss. So why would you want to have it here? Well, the thing is that it's still, even though your take profit is gonna be hit and you'll make those 10%, rendering the stop loss actually useless. It's an ideal world, an ideal scenario where we know that the price is gonna actually rise and reach this level. However, it might happen that the price rises, up to say 9% and then falls straight down. So if you chosen a normal stop loss, which would have stayed in place here. So we mentioned the situation: the price had risen 9% here, and then fell straight down. You will still lose those 5%. However, the price has been like 9% above your buy price. Basically, you were like 90% right in your direction. So if you instead have a trailing stop loss, which moves with the price, as the price rises here up to 9%, the stop loss will be already here at 4% basically above the price. So even if the price fails to reach the take profit and falls back down, actually your stop loss will execute, but will actually make you profit because it will execute higher than the buy price here. So you see the stop loss will be higher than your initial buy price, and basically that's the idea behind using concurrent trailing stop loss and take profit. Okay, we can actually maybe let's see. It still has some way to go. I'm not sure if we can. We're gonna wait and illustrate that, but that's actually it. Let's just send maybe another order with both stop loss and take profit attached to them. So I'm sending an order, market order I'm buying, and I'm attaching a take profit at whatever, 16%. So I know that it's not gonna actually execute, and I'm having a trailing stop loss at 5% below that, maybe even 3% below that. Okay, maybe even 2% below, whatever. So that's gonna be the setup, and I'm gonna just send the order. It's gonna execute. We're gonna see here. So that's my buy price. That's my initial stop loss trigger. That's my take profit trigger. And if the price reaches the take profit, it's gonna execute. However, we know that it's not gonna do that, right? It's not gonna happen. Let's zoom out actually to 15 seconds candles, so we can see a better picture here. Zoom in, actually, not zoom out. That's a zoom in. So we know now. You see my trailing stop loss already started trailing, following the market price. It goes higher. It's almost now above my initial buy price. So you see my take profit is far from being triggered. It's like way above. However, I already de-risked my trade by having my stop loss risen above the initial buy price. Yeah, it's happened now. Even if the price trend reverses and it goes against me, I'm at least not gonna lose money. At least I will make this much of, right? So this I'm gonna make, and my minimum profit, basically minimum guaranteed profit, is rising with the price as it goes higher. Take profit. So again, if it rises and reaches the take profit, I'm happy. I've got my take profit target. However, if it doesn't and it falls back, I've de-risked my trade with a trailing stop loss that at some point have already risen above the break-even price. Okay, so that's pretty much it. That's the trailing stop loss in Good Crypto. You can attach it basically to any order type that you are sending, and at some point it's gonna come also to algorithms as well. In our next video, we will look at the trailing take profit, which is very similar to trailing stop loss, which you can guess, but it has some important distinctions and some interesting interesting twist. So that's gonna be our next video. Thank you for watching and enjoy trading with good crypto.